Hello, everyone. Welcome to 2018. We're here to talk to you today about our Spectrum Investor Confidence Index, and we also want to update you on a really interesting report that we just finished with Millennials and Gen X investors called Attracting the Next Generations of Wealth. So first of all, I'm going to turn it over to our president, George Walper, to walk through our ongoing monthly Spectrum Investor Confidence Index with you.
Thank you, Kathy, and Happy New Year to everyone. As Kathy said, we're going to chat about a number of different factors today relative to our index, which not surprisingly has had a pretty significant reaction in a positive way to the pending tax legislation when this research was done and now the new tax law. This research was done about 4 or 5 days before Christmas. It was released, so it was done the week before that, just as the Congress and Senate was passing the tax bill and right before the president signed that. But in anticipation of that, we clearly saw some very positive trends where our two indices, and for those of you that are a little less familiar with our indices, let me spend a second to chat about them. The first is the overall Affluent Investor Confidence Index, which measures wealthy investors whose net worth is over $500,000. And our Millionaire Index looks at a similar group population, but over $1 million of net worth. It's something we do every month. It's something that we've been doing since 2004. But as you can see, the Millionaire Index was up from last month and up from a year ago, as was the overall Affluent Confidence Index. Now, what's also more interesting is when you look at this from a standpoint of history, the bottom, but more importantly, this past 12 months, you see some very interesting trends. We're almost at the second highest level of where it was in the past 12 months. But take a look just at a moment at the Millionaire Confidence Index from September to now, and the same with the Affluent, which is the orange line. You saw that the last couple of months, November and December, the trend line was down. And that we always look at this in terms of 2 and 3 month periods. That was when the tax law was being dealt with from a political standpoint. Nothing was really moving on it. But as soon as it was very clear that the tax law was going to pass, you start to see a pretty significant upward slope. And we would anticipate, based on even things we're seeing here in the first few days of January and what major companies are doing in terms of improving people's compensation and reinvesting in America, that for the next few months, these numbers will continue to trend upward. So that actually compared to a year ago, but more importantly, compared to October of 2016, which was not on here, but you can kind of see it at the bottom. It's been a pretty significant upward trend, given everything that's being accomplished in Washington by the current administration. How do folks feel about their overall outlook of their house? It's down a little bit from the last couple of months, but the reality of it is September was the highest it had been in many years. And we are getting to the point where it's at least stabilizing. This is how people feel about their household income, their jobs, if they own a private business, how the value of their business holds up, etc. So these are all positive perspectives and significantly higher, as we've chatted about, from the sort of major months of the economic crisis back in 2009, which is amazing that that was 9 years ago at this point. The components of this are made up of a number of factors. Household income, folks' perspective on the economy, which dropped a little bit and dropped from a year ago. Those are not big drops, but it will be interesting to see if those change again, given what's happening now with the tax law and major companies making changes to their employment policy, income policy, etc. The most serious threat, even though the political climate is still the largest at 22%, what's factoring looking at this is where it continues to drop from where it was pre-election and then right after the election. And so now we're down to where it's been trending for the last many years in terms of that equal to the overall market conditions. Excuse me. And the same thing comparing millionaires to affluent on the same topic, where millionaires are a little less concerned, but basically the same for market conditions and political environment. How are people investing? Where do they want to invest the next 6 months in 2018? Equities up a little bit from last month, still somewhat below the all-time high in March of 2012, but much higher than where they were in May of 2008, both individual issues and mutual funds. Given what the interest rate environment has done in the last many years, not surprising that fixed income investments continue to be somewhat low compared to high levels during the crisis, but holding their own. And then people still have a fair amount of money in terms of reserves, but nowhere near it was by any means in terms of 9 years ago. And so things are looking quite up given what the market's been doing and how people are feeling about investing. Real estate is potentially going to be impacted. We'll have to see how people really play out the tax law relative to at least residential real estate and what it means in some states. So that's a category we'll take a look at going forward. Kathy is going to chat about some new study that we just released right after the holidays.
Hi, everyone. So I'm going to talk a little bit about our Millennial and Gen X investors report called Attracting the Next Generations of Wealth. The methodology for this report included 200 individuals each from the Gen X and the Millennial generations, and they each made more than $100,000 of income per year. The other thing that's interesting is we also supplemented it with Millennials and Gen X investors that we regularly get in our monthly research, where, as you know, we do more than 6,500 wealthy households every month, every year, split out between the various months. So we included similar questions to the Millennial and Gen X investors who answered those particular questions. So what did we find about the Millennial Gen X investors? Well, one of the things is that it was interesting for us to find that most of them actually are using an advisor, and we also saw that the Millennials were a little bit more likely to use a financial advisor than the Gen X, which was a little surprising to us. By the same token, if we drill down on it a little bit, they are more likely to still think of themselves as being self-directed and individuals who like to tell everyone that they kind of look into everything that they're doing on their own. Gen Xers, as compared to Millennials, are a little more skeptical, a little more likely to, they'll use an advisor because they feel they need to, but at the same token, they're not really as trusting of an advisor. One of the other interesting factors we found is that when we asked people how did they come by their wealth, overall we always find in our research that people will say hard work and they'll say education, especially those who are individuals in the with a professional background, so doctors, lawyers, etc. They'll also say their education was critical. One of the things that we found that was interesting with the Millennials was that the wealthiest Millennials say that a lot of their wealth came from inheritance. So we're actually starting to see this transfer of wealth from one generation to another. Not so much with the Gen Xers, and that may be because their parents are still alive. Millennials may be from grandparents. It's unclear, but family connections and inheritance for the wealthiest Millennials have been part of the reason for their wealth. When we ask these young people about what kinds of personal concerns do they have, generally their own health and the health of their spouse, a little bit more so for the Gen Xers, and a family health catastrophe. So that's similar even to the baby boomers and older generations that we do research with, where those health concerns are their biggest. Obviously, these are lower than what we'd find for a baby boomer or World War II generation, but they're still the most important health personal concerns that they have. So we want to take a look at the assets of the Millennials, and then the next page we're going to take a look at the Gen Xers. As you can see, half of the investable assets of these individuals, half of the assets of these individuals were made up almost of investable assets. Privately held businesses, 18% for those that owned them. Insurance, investment real estate, principal residence at 12% in their defined contribution plan. On the right-hand side, you can see how those investable assets are broken down. Very small percentage in fixed income, not surprising. Small percentage in alternative investments, and those are probably the wealthiest Millennials that we saw. A good chunk in cash, 25% in cash, which shows they have some need for the cash, but there's also opportunity there. And then 31% of their assets are in equities. Gen Xers are a little bit different. 41% of their investable assets, you can see, are in equities, only 17% in cash, and then a slightly larger percentage in fixed income and slightly less in alternatives. Take a look over on the other side. The principal residence represents a lot larger portion of their overall total assets, maybe because these young individuals are in the process of, having a bigger house because they have kids and they're paying off a mortgage. All of that types of life event kind of information is part of what's impacting the Gen Xers right now. One of the interesting things that we found was that if you are a millennial, you have a higher expectation that your financial advisor will give you a gift to be their client. Sort of one of these things that we've seen has been dissipating in recent years is now coming back with the millennials. And what are the most favorite types of gifts that they were requesting? Sports tickets, not surprising. Tickets to classes for yoga, or tickets for different types of concerts, etc. So those were the things that they were kind of looking at their advisor to be able to give them, because we were clients of that advisor, much smaller from the Gen Xers. The other thing that's important for these younger investors is the financial plan. Most of these numbers are higher than what we generally see with our older investors. So you can see that basically, when you ask them how important it is, the millennials say at 62.45 and the Gen Xers at 63.45. Very similar, male, female. Those who consider themselves to be very knowledgeable are more likely to believe that they should have a financial plan. But even those that aren't very knowledgeable, that are Gen Xers and millennials, really feel like they need to have a financial plan. So financial planning is going to be very important to be able to attract these young investors. Another interesting thing that came from our research was that millennials really think that texting is the way that they really want to engage with their advisor. It's the easiest way to communicate for them. So more than 2/3 are willing to text with their advisor, whereas the Gen Xers are much more cautious about that, where only just less than 1/3 are willing to text. So these are the types of interesting information. Oops, I forgot this very last page. Money management apps utilized, as you can see, this is all millennials using Venmo and different types of services like this, much more likely to than Gen Xers. Excuse me. So that's just part of the interesting findings we had with the millennials. I'll turn it back to George.
Well, thank you. What's also keep in mind for Millennials and Generation X is that in each of our wealth segments from 100,000 to 25 million, there's a pretty significant population of Generation X and Millennial investors. So even though traditionally folks are not focusing on them, one, you should, and secondly, more importantly, how to focus on millennials in particular is something you should be really thinking about, because they are using different types of tools, as you know, and they're also investing differently. These insights, both our index and some highlights from our ongoing research, as you know, is available in our High Net Worth Investor newsletter, which is available for individual subscription or part of our overall Wealth Spectrum subscription for our clients. Here's the list of topics that are in this particular month's issue, which was just released yesterday, yesterday being January 2nd. A little bit more insights around millennials, folks who are referring business in terms of finding an advisor through referral, how advisor dependency is used, and our research recently with accountants and their perception of financial advisors than what they tell their clients. And then 4 articles that's more detail about our index. We thank you very much, and we look forward to speaking with you on February 1st. Have a great beginning of the new year.